All right, y'all. So today, in this video training, we're going to talk about placing your trades and setting the intraday key level. This is the meat and potatoes of my strategy. Everything else all leads up to this, and I'm going to show you several examples. So this video it may be kind of lengthy, but enough to give you an understanding of how to do it. And at the same time, we're going to be back testing this at the same time, so we can see where you would have capitalized if you've taken the trade, or where you would have lost if you went the other direction. And since SPY, when I trade every day, has so many lines on it, I'm going to go to QQQ, but the same things apply, the same rules apply for QQQ and SPY. And we're gonna be setting up the same thing. All right, cool. Let's get rid of this here. All right, placing your trades. I'm not going to talk about what I already talked about because, excuse that background noise, because the landscapers are outside right now, and they're landscaping my my yard. But anyway, hope you can hear me still. If not, let me know, and then I'll just do a new video going forward. All right, cool. Now, after you've done all that you were supposed to do up until the opening bell, here's how you would place a trade or enter a trade. You know, every day on my YouTube channel, it's the same thing. It's not going to change. It's the same thing. So you know I'm not doing anything extra with this training. The first thing you do is you look at the 930 candle to see what direction and who or what group is in control. On this particular day, which is today, you can see the candle that closes at 930 is a green candle, and the bulls are in control. But why were the bulls in control? Well, if you did your pre-market analysis, that what I showed you in an earlier video, you would have saw that today QQQ or SPY, the market was kind of down. So at the open, people were taking profits, which is pushing this up. Anyway, that's not the candle we're concerned about in terms of intraday key level. The very next candle we're concerned about is this one. The candle that opens up 930 and closes at 935. As you can see, I trade on the 5-minute candle. So if you're going to be following my strategy, you need to set your charts to 5 minutes. Though you do top-down analysis on other time frames, but for this particular trading strategy, I use the 5-minute time frame. So now, let me open this up a little bit so we can see a little bit more. Now, on this candle, you see we have a lower wick and an upper wick. That becomes the key levels for the day. That's what I do. So let me go set the key level to the top of this, and the key level to the bottom of this. This is what you're going to do while the day is happening in real time. So now I don't take no trades unless the price action gets above or below this key level. So now here's when sitting in your seat long enough and getting that intuition that is hard to really teach that. Getting that intuition to know it's time to take a trade. As you can see here, your key level can do two things. These key levels do two things. They act as support or resistance for that particular day and for the price action. On the very next candle, the one that opens up 35 and closes at 40, as you can see, we break the upper key level. Now, this is something that you have to learn. I normally teach wait for the candle to close, because if the candle closes above this, we take trades to the upside. If it closes below the key level, then we can take trades to the downside. So in this particular case, on my trading today, in terms of SPY, when SPY did this reverse, I jumped in right as the candle was about to close and rolled this candle down and sold on that downward pressure, because the key level became the indication, the info, the data that I needed to take the trade. Now, after we take that trade and get out, we don't do anything else until we get another area of influence, area of confluence letting us know it's time to take another trade. The very next candle, nothing, because it's still in between the key levels. The next candle, still in between the key levels. The next candle, still in between the key levels. The next candle, it breaks the upper key level. So this is another place where you can take a trade. You wait for the candle to close. As you can see, it closed above it. The very next candle becomes your entry. Now you have to watch it, because if it breaks below the key level and it goes too far, you need to stop out. If it holds like this one held, you're still in good position. This is a good opportunity to even add a contract, because initially, as you can see, it went in your favor, then came back but didn't break the upper key level. So you can add on that position. And on the very next candle, we ride it up for more gains. That is how you take that strategy. So now let's go to another day. Let's go to a previous day. Let's close this up. Let's go to the 22nd. We're going to back test this. Let's go to the 22nd. All right, here we go. Same deal. We watch. As the candle closes at 9:30, the market starts. You see we have a red candle. We do have an upper wick up there. Let me know they're trying to push it down. The very next candle, we get a upper wick, but we don't get a lower wick. So I do set the upper wick, and it's also up here right next to the 200, which is a strong indication of we got some resistance up there. So now we don't do anything until we break above that. And on that very next candle, the one that closes at 9:40, we do get a lower wick on that candle. So now you can set a lower key level. So now there is no trades until we get above that or below that. So now the very next candle, no trade, so because it's in between it. Next candle, no trade in between it. The next candle, no trade in between it. On the very next candle, the one that opens up 50, closes at 55, it breaks the upper key level and breaks the 200, but you want to wait for it to close. You can front run this if you have that enough confidence in the candle with the kind of energy you see. See it kind of pushing up pretty strong. You know it's going to close above it. You could jump right in. Sometimes if you're new, I say wait for the candle to close, because they can make these upper wicks run up and come all the way back down like we saw in the previous example. So anyway, this one closed above it. That's your entry right here. Ride it on up. And when you're in the trade with the guardrails, what you do is this. As it go in your favor, you move the guardrail or the stop loss up so that you're always walking away with green. If it goes red against you, you got no choice. Take your hand off the computer, let the guardrail stop you out. But if it's in your favor, move it up, let the guardrails do what they do. Because now it has two choices: to continue giving you more gains and you continue moving the stop loss up, or you get stopped out with your green. In this case, this would have been an easy trade. It's going in our favor. Continue. We continue hold. And if you want to, like I said, if you don't get stopped out, just keep holding. Just keep holding until you get stopped out. Now, what happens when it's coming back down? Do we take trades? You can take trades coming back down. As you can see here, we got upper wicks up here. I will wait, because as the energy slowing down, I will wait for the energy to really slow down and see if we stop going up. As you can see, we stopped going up. Yesterday, I took this trade yesterday. It stopped going up. So now I start riding it down. Once you have your key level set, it kind of guides you on what to do during the intraday trading session. And when we come back down to that key level, you see we got activity here. Come down, get stopped. That lets you know it's a possible trade there. You can jump in back, going back up right over here and ride it on up and get out on that push up. As you can see, this is the strategy. Let's check another day. This is the 21st. Let's pull this down. Same deal. After going through our pre-market and all our pre-market analysis and our routine, we come over here. 9:30, the candle opens up. It's almost a doji candle, but it is green, so somebody is leaning into the bull's favor. The very next candle, what we get an upper wick, but no lower wick, but at least the upper wick allows us to set the upper key level. So now we don't do anything until price action crosses that. The very next candle, no trade, doesn't cross it. The very next candle opens up 40, closes at 45. It does break the upper key level. So now what we do, remember, this is when you have a choice. Do I want to take, does the energy look like it's running real strong? I could jump in and ride it up. Or do you want to wait for the candle to close? Newbies, wait for the candle to close. This candle comes up to the 200. It closed above the key level. Here's your trade entry. The 200 is acting like a good level of support, and you ride it up with the guardrails. That's another green trade. Here we go again. And now you can set on your laurels, wait a while. See this upper key level on the 10:05 candle? Set another key level up here during the day. Don't do anything now until we get back up it. We come all the way back down. We get over here. You see that? It breaks the key level on that energy. Now you can risk your gains from over here by front running this and using that as a stop loss, or you can wait for the candle to close. This candle closes up here. Here's your entry. Ride it on up with the guardrails. This is the strategy I've been using to grow my small account from, I think, like I said, started at about $300 all the way to where you see it is, or you see it now, which is up here. It's the same strategy. I only begin losing or taking drawdowns because I got impatient and I was trying to go for home runs and hold stocks a little bit longer. But the accuracy of my trading strategy, once I get in green, the guardrails I move them up. So now it's pretty much a green day. Now you have to get used to getting chump change. With a small account at first, we're talking 1%, 2%, 3%. So on $100, that's $3. That's fine. Tomorrow, the next day, you got $103. And you keep going from there. $3, $6. Then it becomes $10 and $15. All that starts to add up. So now you can take 2 trades and 3 trades. Once your account begins to get much, much larger. Let's back test some more to see if we would have gotten some more green trades or more gains on this strategy. All right, cool. We back at May 20th. Let's open this up a little bit. All right, cool. As always, we watched the 9:30 candle. It's a red candle. All right, cool. The very next candle opens up 30, closes at 35. What do we got? We have an upper wick and a lower wick, and it's pretty close. So still, we set the upper and lower key levels for the intraday. So now we don't do anything until it breaks and it holds. The very next candle breaks it, but it doesn't hold. That's why I like to wait for the candle to close. The very next candle, the 45 candle, breaks it again, but it doesn't hold. That's why we wait for the candle to close. The very next candle, it breaks it. I'm hoping that it closes above it. It closes below it. It does close. Now, this is one of those candles when you would have had to say, I like the energy. I'm going to front run this. I'm going to jump right in. Jump right in and ride that bad boy down with the guardrails. It pops you out. As it gets down here, you walk away with the green. And one thing I like to say is this. I remember hearing a day trader say this, and I want to share it here. Ask yourself this question. When you see a long candle in any direction, candles like these long candles, like these two here, when you see it coming down like this, is it a strong candle the longer it gets, or it is a weak candle the longer it gets? I'll give you a few seconds to answer. Now, if you said it's getting weaker, you're absolutely correct. Why? Because no candle, no price action continues to go in the same direction. Why? Because this is a game of fear and greed. When you are trading against more humans than computers, it is a game of fear and greed. And when people are making money, they're getting greedy. But when they see their account growing fast, then they begin to get fearful they're going to lose it. So they start taking profits, making the price action become much weaker and want to go back in the other direction. You being an astute learner of day trader, you know this. So now you wait for the next candle to ride the elevator going right back up. Now you want to wait for resolution because I've seen this happen before. The candle changes, it starts to go green, but it's not that strong and continues to sell off red. So you have to be pay close attention to that. But once again, same strategy. Now watch this. Remember the key level was here. So as we're coming back up on this candle, we wait for it to close. It closes up here, but remember, it's not strong anymore because it's a long candle, so it gets weak. So you can play this right here, jump in here, ride this one down, and get some more gains on that one. That once you get a pulse on the market of that particular day, you pretty much got your foot on its neck, and you ride it pretty much any direction you want because now you know the vibe. When you don't know the vibe, that's when you start getting chopped out and squeezed out of your position and you start revenge trading, then you start losing. Let's look at a few more examples. Let's go back to another day. Let's go back over here. Let's look at, nice, we got a nice one here. This is when the guardrails really become your friend. This is on May 19th. Now, this is going to be a tough one. Let me tell you why. The candle that opens up 9:30, which starts the market, is a green candle with a lower wick, but it's a nice size green candle. Let me know. Bulls are in full control. We don't do nothing until we get our indication or our edge. It's time to take a trade. On the very next candle, the one that opens up 35, as you can see, it's a long candle, and we have a upper wick, no lower wick. That's fine. We set our upper key level for the day. The very next candle opens up here, and what are we doing? We're waiting for the candle to close. But once again, once you've been in the seat long enough, you can see the energy, you can front run this. I would have front run this, meaning the minute it broke the key level on that kind of energy, I would have just jumped on in and rolled it up with my stop loss at the guardrails sitting there. I'd have been confident that if it go against me, at least I'm getting stopped out. It runs up after it breaks the key level. You ride it up. Now, I would have sold as it got close to the 200 because remember, that acts like a good level of resistance. But once you have enough time in the seat, you begin to know in the market, you know, sometimes that kind of energy, it'll break through the 200. It breaks through the 200, and if you're still holding, you can continue holding and keep getting your gains. But once again, sometimes, like I said, them lower wicks, you're holding here, hoping it don't go against you. Stop loss is here now, and what it does, it comes back down and pop you out on that next candle. That's fine. You're still walking away with the green. But that's the purpose of key levels, so that we know when it's time to take a trade, and you do the exact same thing to the downside. Now I want to talk about one other thing, which is strike prices and contracts to buy. Let's jump on over there now.